Leading our panel today, we have the head of Fintech from Invest Hong Kong, King Leung. Let's get King Leung on screen. King, I can see you down in front of me. Let's put you up for the rest of the crowd. And here comes our moderator. There he is. Big smile and a wave. Fantastic. Excellent. Now, King Leung is going to be joined on stage by our two speakers. Let's have them out here. They are John Ho, the head of legal for financial markets for Standard Chartered, and Vincent Lau, who is the head of innovation at HSBC. Ladies and gentlemen, big round of applause for our CBDC panel. All right, go get them. Hey, go get them, guys.
Hello, everybody. Can you hear me all right?
Yes. Yep.
Good? Great. Okay, my apology to the organizer and all the folks in the audience that I'm actually currently in Japan, and I'm trying to basically bridge, Hong Kong with a lot of the neighbors, particularly in fostering the collaboration in fintech, and most specifically on the topic of CBDC and stablecoins. As a matter of fact, yesterday I met with the regulator in Japan, FSA, to really try to learn from the thought process around the regulation and promotion of stablecoins. So I think this is truly a great privilege to have two people really in the know about this topic, knowing inside and out. I still remember it was probably more than 6 months ago that I was calling up a good friend, Benedict at BIS, asking for some advice about who's the expert I should talk to learn about stablecoins, and she pointed me to John. And I also got privilege to talk to Vincent, and these two gentlemen are really the wealth of knowledge on this topic, not just from regulation standpoint, but also from the application standpoint, representing two of the largest banks involved in cross-border commerce. Now, so without further ado, I guess I would like to ask a question that I think John and Vincent, just feel free to chime in with your wisdom. Now, the first thing perhaps to sort of baseline for our audience. So can you help us understand a bit better about the use cases of CBDC and stablecoins? Because some people got confused that they thought they're kind of the same thing, but essentially they're not. So can you just help us a little bit about the use cases, and as a follow-on to this is whether or not the CBDCs and stablecoins can coexist. So John, Vincent, please take it away.
Okay, thank you. Thanks a lot, King, for having us. Before we start, I'd like to thank Bowie and the organizer for inviting me to be on stage. And the views I express are my own. They do not necessarily represent the views of my organization. I think there are two questions there. The first is why CBDC? What's the use cases? And what's the use case for stablecoins? I think before we start, the basic thing is CBDC is a digital representation of central bank money in the digital form. It is still fiat, it is still a legal tender, and is widely accepted as a mode of payment, storage of value, unit at account. So by contrast, stablecoin is largely used in the digital assets world, in particular the crypto world, as the sort of the de facto currency for the crypto world as a storage of value, and henceforth the term stable coins. So earlier in the earlier panel, they talk about various types of stable coins, but I think the closest proxy to this would be the fiat-based, asset-based sort of stable coins, because not all stable coins are stable, as we all know it, especially in particular with the sort of collapse of Terra Luna, that's not stable anymore. Moving back to the use cases, in terms of the CBDC, there are two forms of CBDC largely. One, wholesale CBDC, which is used largely in the interbank payment, cross-border payment with among banks and credit institution. Then the other one is what we call the retail CBDC. And there are a number of stated reasons why retail CBDCs are being used. One of which is to enable faster, cheaper, lower cost of transaction in terms of the cross-border payment. Two, financial inclusion, to reach out to the unbanked and underserved community. Third, also, for a lot of the central banks, they feel the threat of privately issued digital currencies this provides a monetary anchor of payments and also protects the monetary and sovereignty with respect to the central banks is concerned. The second part about coexistence, and I think obviously my partner here will also speak about that, but I'll maybe posit my views on this. Can central banks and stablecoin coexist? If you look what's in the space right now, the central bank money is largely used in the fiat payment-to-payment, interbank payment space, and also for retail payments. Stablecoins, as mentioned, currently it's sort of used widely within the crypto world, decentralized finance, and so used as largely a collateral in the context of DeFi, protocols, and what have you. And I think in comes to the statements from a lot of the ECB, UK central bank, Asian central banks, they do posit the view that from a competitive perspective, you must have and should have different mode of payments so long as they subscribe to the activity or principle, same activity, same risk, same regulation. And I think where we're coming from is that the use cases are different. Just in terms of a nutshell, CBDC, digital form of money, largely used for either retail purposes or interbank payment, especially, and also stablecoin, largely used in the decentralized DeFi, metaverse. And I do think the day will come that there will be some sort of a convergence, but it is important to ensure that public and retail have choices, and with that, my view is that they will and should coexist in a sort of coexistence in a cohesive manner. With that, I'll hand over to Vincent.
Yeah, thank you, John. I think John gave a very good overview and discussion around stablecoin and CBDC. The only point that I want to supplement probably is that whether they can coexist with each other also depends on the particular jurisdictions that we are talking about. I've spoken to some central bankers who are of the view that they should coexist. They serve different purposes. They have different use cases, like John mentioned, including the HKMA. They are very proactive in trying to bring stablecoin issuers under proper regulation to protect the innovation and also to boost the economy. But there are also some central bankers that I've spoken to don't believe that needs to be a stablecoin in their particular economy, and they want to have a retail CBDC to play that role. So for some of these jurisdictions, they have made more of an administrative decision to just use a central bank issued CBDC in place of stablecoin. But for the more innovative, more inclusive, and more international financial hubs, I definitely see them coexisting going forward. King?
Great. Well, I think the one other thing that even personally I'm very interested is about, obviously I know that you two gentlemen have been following the regulations very closely and across different jurisdictions. Now, can you help the audience to understand better about the commonalities across different jurisdictions and regulations? And as also another follow-on, what would be the market, I guess which markets do you see has made the most progress when it comes to the stablecoins regulation?
Yeah, maybe I will start first because I'm not an expert in regulatory compliance. I'm really more of a business guy, so but I will take a crack at this. The key thing that we are seeing in terms of stablecoin regulation is that there are more attention to the sort of the governance of stablecoins arrangement. In particular, those that are more systemic and have more implication to the real monetary systems. As we have seen more recently, there are interplay between the traditional financial markets as well as the stablecoin. We have seen even USDC getting depegged to probably 82, 83 cents for the dollar. So a lot of the regulator is now more focusing on both to look at the governance of this arrangement, the ownership structure, how they hold their reserve, what are the disclosure that they're making, and they're also starting to look at more about what is the issuance and also the redemption process from an operational perspective from this issuer so that they can protect the investor, the consumers that have access to these stablecoins, at the same time to still try to find a balance on how they can still promote innovation without over-regulating it. John?
Yeah, just to build on that, I think the focus in terms of regulation, I would sort of bucket them into three. The first relates to crypto assets. I think largely a couple of years ago, the focus was on anti-money laundering, counter-terrorism financing, and the world has moved on to realize that you cannot just look at AML, CFT, because statistics from chain analysis, elliptic, have shown that the bulk of a lot of the use cases were for legitimate purposes, largely rather than for legitimate purposes. But I think given the fact that if the digital assets, in particular crypto assets ecosystem were to grow, you need to have strong resilience in the system. As you note, we had crypto winter with Three Arrows, Terra Luna, FTX, Whole Knot, Voyager. Why are they having that? Because of the interconnectedness between the crypto players. And henceforth, there's a realization that in order to build resilience in the systems, you need consumer protection. You need clear regulatory safeguard to make sure that if something like that happens, one, there is resilience in the system rather than all of them interconnected with each other. So I think the regulatory landscape and where the Financial Stability Board, the central banks are heading, is to ensure they embed market integrity, market abuse rules, business conduct rules, especially with crypto asset service provider, and in Singapore, Hong Kong, they call it the VAS, Virtual Asset Service Provider. So the focus is moving away from not just AML, CFT, but also making sure that they are properly regulated, well capitalized, ensuring that they conduct the rules in according to enhance business conduct rules, and that's happening across the globe. The FSB, together with the CMPMI, have indicated that their intention is to come out with clearer rules later in the year. There would be a statement in the G7 sometime in May or June to sort of advocate a comprehensive, consistently applied and global regulatory framework for crypto assets. On stable coins, as Vincent and King had mentioned, looking at the impact of Terra Luna, and also more recently, USDC breaking its peg. Well, although the USDC could be carefully designed, the risk can lie somewhere else. In the context of USDC, why it broke its peg is because the custodian bank, in the context of Silicon Valley Bank, was in the midst of a financial distress, resulting in the FDIC bailout. Pending confirmation of the bailout, there was a concern that 3 or 4 billion of the reserves that underpins USDC could be totally lost. And henceforth, there was a concern that USDC might not be 100% backed. The focus on the regulatory aspect of stablecoins, especially the peg-backed stablecoins, would be on three things. One, convertibility. Can the holder of a stablecoin redeem the stablecoin one for one? Two, relates to reserve backing. Will there be transparency to ensure that the underlying stablecoins is backed by a reserve that is audited with full transparency? Third, it's also segregation. In order to ensure that the assets are ring-fenced, there is an increased requirement to ensure that the fiat underbacking the stablecoins are held with an independent or third-party custodian. So that's the kind of area of focus that we're seeing in stablecoin. Yesterday, the Undersecretary Joseph Chan mentioned that in Hong Kong, the Hong Kong authorities are looking at the consultation submissions from various bodies, and the aim is to come out with a finalized statutory stablecoin framework in Hong Kong by the end of the year. So lots going on, but what we are comforted to know that there's been a lot of concerted effort by the public authorities and international setting bodies to actually solicit feedback and to create what we call a consistent, cohesive, and comprehensive regulatory framework for stablecoin and crypto assets.
Well, another thing we really like to learn from the two gentlemen is that particularly over the past few weeks, I've been traveling to the US, Canada, now I'm in Japan, in Tokyo. And so I spent quite a lot of time talking to the private sector and regulators. It's interesting to see that in Canada, I already saw the private company already received a license to issue the stablecoins. And likewise, just as a matter of fact, just yesterday, I met with a Japanese company that are also minting the JAYC, right? Sorry, JPYC, the Japanese dollar-backed stablecoins. It's also a private company. So the question I have for the two gentlemen is that, so naturally, of course, I think Japan just one market, just so happened I'm physically here. For the Japanese market, they allowed the banks, the trust companies, as well as the startups to participate in the issuance of stablecoins. So I'd just like to hear from you about, so I know you talked to the regulators, the central banks quite a lot. So what do you think would be the right regulatory framework, particularly if we're going to open up to more players beyond the banks?
In terms of the regulatory framework, what we have as a bank feedback to our regulators, HKMA or SFC, is that we believe we should apply the same business, same risk, same rule type of concept. But at the same time, we are also trying to see to better define the stablecoin that we are talking about, because there are different stablecoins. Stablecoin is a very big basket. There are systemic, more important stablecoin. There are stablecoins that are used for payments and as a settlement utility that probably may be requiring a higher standard of regulation. There are also stablecoins that are less, have less impact or less interplay with the fiat of the traditional financial system. So we are trying to see if we can have a sort of more flexible regulatory regime that regulate the more systemic or the more monetary policy impactful type of stablecoin with the sort of same rules that authorized institution in Hong Kong is subject under, both to protect the innovation as well as to protect the holder of these stable coins. But at the same time, we believe there are a lot of non-systemic important type of stablecoin that should not be subject to as rigorous as a standard as some of these banking license per se. So we have supported a more of a flexible regime whereby we can both protect the public as well as to continue the innovation as a market in Hong Kong.
Yep. Just to build to what Vincent said, I think stablecoins are used for many purposes. So if it is with respect to the fiat payment, interbank payment, obviously especially the systemically important stablecoins, that's the focus of central banks, the setting bodies, to ensure that one, there's a level playing field with respect to incumbent banks and non-banks. And to your point is if they are subject to the same activity-based regulation, same level playing field, I think, as I mentioned, we should engender competition because at the end of the day, it benefits consumer from a pricing perspective, choices in utilization of services, and also innovation. Now, with respect to the non-systemically important stablecoins, especially as those used in the digital world, for example, in gaming, in digital art, we're already seeing that happening. I think so long as these are used for legitimate purposes, not for money laundering purposes, with sufficient safeguards, there is a use cases for that because these are not the types of activities that regulated institutions are interested in as well. So we can't be everywhere, but in order for innovation to foster, we should let consumer make those choices. I think that's the key point.
Hey, King, you are not audible.
Oh, sorry. So I know that we are a bit short of time, but I think there's one question that actually a lot of folks that I met also would like to know, because BIS has been collaborating with HMA, the BPOC, I think the Bank of Thailand, the UAE Central Bank, and the Ambridge project. Together, this is just one of the many projects around the world about the sort of viability and the technical feasibility on the cross-border CBDC and also the foreign exchange transactions. So as a matter of fact, BIS published a report that has laid out some enormous, fantastic insights. So since a a lot of folks may not have the time to really read the whole report in detail. I'm just wondering if Sir John and Vincent, whether or not you can shed some lights about the key takeaways from the reports that might have far-reaching implications, particularly for the private sector.
Yeah, sure. For Project Ambridge, it's really a what we call the wholesale CBDC use case. This also reflects some of the thinking of our central bankers who are really now more focused to find wholesale use cases while leaving the retail use cases a little bit more open to innovators in the industry, including stablecoin issuers and other market players. But from a wholesale perspective, the objective of Project Ambridge is to see how they can improve bank-to-bank settlement, especially cross-border settlement between strong trade partners like Hong Kong, Thailand, UAE, and mainland China. So from our pilot last year, we have been conducting live transactions for our corporate customers. So supplier payment between China and the UAE, treasury payment between Hong Kong and Thailand, for example. What we have proven is that the platform works. We have a centralized platform for multiple CBDC to be issued on it, and for institutions in Hong Kong, banks like ourselves or our friend in Stanchart can get wholesale CBDC on the platform and settle with each other on a P2P basis. In that case, we can improve the speed and also the finality of the settlement and reduce some of the counterparty risk or the intermediary risk that exists in today's core bank type of flows. So we are quite confident that we can continue to work with the BIS team as well as the central bank teams to further enhance this platform to bring more functionalities, including maybe FX capability, including liquidity provision capability, and eventually make this a viable channel for cross-border payment to be settled between banks in these jurisdictions.
Yeah, just to build to what Vincent said, the Ambridge is obviously focused on cross-border, but that's not the end state. The end state is we want to have a frictionless cross-border digital economy across the major economies that we're trading in. And one of the sort of future use cases we'll be seeing is the use of CBDC in the context of tokenization. Tokenization of real-life assets, of financial instruments, and also tokenization of non-native assets, like for example, non-fungible tokens linked to intellectual properties, digital art, collectibles, real estate, and also last but not least, we're seeing in the sort of increasingly how do financial services be provided in the metaverse world.
Well, thank you so much, the two gentlemen. This is an exciting topic. In fact, I spent like hours talking to the folks in this topic, involved in this topic, and I'm still not 100% sure I understand everything. But I think this is hopefully a great snapshot overview for the audience to learn more about the current regulatory status on the CBDC and stablecoins, and particularly the potential private sector business opportunities. So with that, I just want to have another big round of applause for the two great experts on this field. So hopefully we are able to meet you all to really talk about the opportunities on this enormous opportunities going forward. So thank you so much.
Thank you, King. Thank you, John.
Thank you. Thank you.
Yeah, thank you.